Alright guys, welcome back to my channel. Today I'm going to do status of the crypto markets. This video will be part 1, and I don't know how many parts there's going to be. It depends on how much further information there is, but yeah, this is part 1. Okay, so the goal of this video series, I guess, of the status of the crypto markets is to figure out where we are now and where are we going, and whether it's time to sell or anything like that. It's just to kind of navigate the waters and see where we are right now. So here's an example of the overall macro picture for crypto that I'm gonna go over. So here's this I'm gonna compare it to the internet adoption cycle, so we can understand like the overall market acquisition position that we are in for crypto. So what this represents is the distribution of everyone in the world, or the market that will be captured. And eventually the internet will capture the entire world. There's about 8 billion, or about between 7 and 8 billion people. So we're roughly about over the 50% mark for internet adoption, which means that most of the growth is behind us, but we are still in a steady growth phase. So when it comes to adoption, what it is only geeks in the very, very beginning, only geeks know the potential of like the internet, for example. Like the geeks are the ones that are thinking about it. They're thinking about ideas in their head. I guess I would consider myself one of these geeks because I, like to think about models. I like to think about new technology. It's one of my obsessions is I always think about new technology. So whenever a market's new, it's the geeks that kind of get the potential, and everyone else is like, oh, that's some geek knowledge stuff. So same thing with the internet. And this is about the 80s to the 90s, right? Before the internet. This is before the internet was really practical. But people were getting the concept. They were getting the idea early on. Suddenly, the internet becomes cheap to use, right? So, like computers, personal computers become cheaper. And there's more, Metcalfe's law comes to play here as well. And eventually there's, standards created, and it starts becoming inexpensive. And because of this inexpensive, we enter the most hyper growth period. This is the hyper growth period for a new technology. At some point it gets cheap or inexpensive, and then it just starts taking off the use cases. And so the internet, about the 1990s through 2010, the period of the fastest price change for the internet stocks, etc. There was the internet bubble, and the internet became easy to use. So that onboarded, the hyper growth phase, easy to use, very cheap, and also the first real world use cases were established, like Amazon in the 1990s, right? And this is where fortunes were made. Fortunes right here, okay? When you hit the 50% mark, that's when most of the growth is over. Because from here, you could at most grow, unless you become more efficient, like the businesses you invest in become more efficient, etc. But, most of the exponential part is over. You can just about, 100x, or 100% gain, or depending on efficiency increases, on this second half, there's just not nearly as much opportunity. It's much more difficult for opportunity. This is where you want to invest right here. You hear some geeks talking about some stuff, you better pay attention to those geeks, because that's where you want to invest. And so about 2010 to 2020s, the internet moved past the 50% capture, and we're at 3.3. The internet's not done growing. It still has to, capture the last bit of the world. And it's slow and steady growth, and it's mostly in poorest countries, usually, are the last ones for this adoption. All right, and so now we're here looking at crypto, and where I think we are in the overall picture for crypto. So we got about 10 to 60 million users, which is still like nothing. Blockchain is not cheap to use. It's very expensive. Like true blockchain technology. Some people are using like Binance Chain and all that. it's not really blockchain. I mean, it's using blockchain, but it's not decentralized enough to be considered permissionless, which is the true nature of blockchain. However, that's going to change, with things like Polkadot or even Ethereum Layer 2 or Luxo, okay? So we're entering a period of, the scalable, cheap, inexpensive blockchains. And it's probably going to happen this year or next year, but it's within this time frame. And then this shows you how early we are. We are before this phase. So even if, all of the previous crypto bull runs and bear markets have been in this part of the cycle. This is all my opinion. And I'm not a financial advisor. I want to get that out of the way. I'm not a financial advisor, but everything that has happened, in my opinion, has been before the hyper growth phase. And just now, the institutions are starting to get it. Just like the internet, like the institutions, when the technology people come in here and once it, because they're realizing there's something here. This is where we are. Before anything really useful, there's people playing around with it still. It's still geeks, but blockchain is not cheap to use. So we're not even to this point yet. Blockchain will become easy to use in this hyper growth phase. First, real world use cases will be established, and I think there's going to be many. And institutional money and integration will start, entering in about this period, which is happening really much like right now. And by the way, crypto is the biggest wealth transfer in human history. That is my opinion. And I'm going to get into that later with a later part of this series. This status of the crypto market series. I'm just going to highlight why I believe this to be the case. But for now, that's why this is going to be something for the history books when it really happens. Okay, and so this, I think that it's going to be sometime this decade. As a friend of mine said, this is going to be the decade of blockchain. And I actually agree. I think that this whole decade, even if we enter a bear market for crypto and it lasts 2 to 3 years, it doesn't matter because the amount of growth that we're going to see is going to be astronomical. So it's worth being patient for because of this period when we get blockchains that are easy to use and they're cheap. Inexpensive blockchains. And 50% capture, and then later on will be this steady growth. And I think this is, later on, who knows, but sometime after the 30s, after this decade. Okay, so when we think about where are we in the crypto markets, we want to think about timelines. And, this is where we are, past, present, future. And we can, reflect on the past for information that'll help us. So, in my opinion, in 1 to 4 years is when we're going to enter that hyper phase. I really think it's going to be probably 1.5 years or something. I think we might enter in a bear market with crypto, but it's going to be shorter. This bear market's going to be shorter than the last one. The last one lasted about 2 to 3 years, but this one's going to be shorter. I actually think we're going to enter a bear market. Right now, I think we're going to go higher from where we are now, but I think there is going to be a bear market after the next significant rise, maybe. This is all guesswork, right? But I think that we're going to see a hike and then we're going to see a bear market and it might go significantly low. But then it's not going to last like 2 to 3 years like it did last time. It might last a year or so, and then it's going to take off and we're going to see this astronomical growth. And I think that all of that's going to happen within the 1 to 4 years. And the reason why is because we are going to get those cheap blockchains. Like, a lot of blockchains are going live, like Polkadot, that are extremely powerful technologies. So that's why I, in my thoughts, how hard is it to hold on to something for 4 years, even if it goes super negative? I'm just not going to trade. I'm just going to hold, unless I see, unless it goes straight to Astronautville. But for now, I'm just holding. And then in the longer run, I think about 6 to 12 years or 90 to 120 months, in my opinion, we'll hit that 50. So like this decade, the blockchain decade is when we're going to cross over that 50% mark. As my friend said, this is the blockchain decade. I actually agree with that. I think 6 to 12 years, we're going to hit that 50% mark. So we're going to enter the hyper growth in this next, pretty soon, like within 5 years, I would say within 5 years, we're going to be hitting this. And this is going to be the greatest wealth transfer in human history. like when we really run into a bubble, when we really get those applications, it's going to be astronomical, in my opinion. So one of the reasons I think this is because it takes months for large businesses to enact action, and it takes years for that action to bear fruit. So where am I getting this from? Okay, so one of the things that happened recently was Elon Musk adds Bitcoin to Tesla. And Michael Saylor has been spilling off all about it as well. And for me, this was a zeitgeist moment in this whole thing. You know, like back in the day, before crypto bull run of 2017, there was the guy that held buy Bitcoin behind Janet Yellen, the Federal Reserve chairwoman. He held up Bitcoin, and that was kind of like a zeitgeist moment. It was like when Bitcoin was becoming aware in the mainstream. Well, Elon Musk adding Bitcoin to Tesla, that was a zeitgeist moment. That was a moment that changes history. And what it set in motion, this is all my opinion, is a domino effect. Dominoes are now falling. And it's leading, like the world is made up of many actors. And so this domino, it started a chain of events when Elon Musk did this and when he announced it and when it became public and all of that. It set off a chain of events. And now it's cascading through the human population. You know, like the information is propagating and it's spreading in this dominoes effect, outward effect into the effects that crypto is going to take over from here. But these things take time. So we're in those exponential knowledge phases. We're in the exponential zeitgeist phase that started from this major event. That means human capital, human awareness, crypto integration, crypto regulation, crypto integration. So crypto is going to start putting its tentacles into every business model now, because now this is happening. And so you're going to have business people with ideas and innovations, and they're all going to start paying attention. And you got boardrooms, board meetings. They're all starting to talk crypto, thinking about it, thinking about their strategy and it in the context of their business models in the future. So all of this is happening now, an exponential process. Even if it's not price movement, this is happening in ideas and in propagation through the human species, okay? And it takes months for large businesses to enact action. So what happened here is going to take a while before large businesses take action. Their board meetings have to find the legal paths and all of that, you know, dealing with compliance, all of that. So it's going to take a while for what happened, this zeitgeist, people meeting, discussing, thinking about, and then these businesses buy. In the meantime, you have individuals that are probably front running their own companies. I wouldn't be surprised if that's happening, but these businesses take time. So, this is why I'm thinking this is 1 to 4 years out. So it takes years for them to take action, and then it takes years for the action to bear fruit. So basically this decade, will be the blockchain decade, in my opinion. Okay, so now the next part that I want to go over is the tools. What tools do we know to figure out where we are in the crypto market movement? Like, where are we in this? Is the status of crypto markets? So, let me do this. Okay, so basically it's information. We're taking in information, and we want that information to help us. Does this information help us with future probabilities? Right? If a piece of information that you're looking at does not help you with future probabilities, it's worthless information. However, if it does, then you're going to see it go off into many different directions. Okay, I have it split here into two major categories: mathematics and game thesis. So game thesis is your model of human behavior and model of events and model of what's going to happen. Okay, and this is where I like to make my money. Okay, everybody has their unique strategy. A game thesis, like to get into the nitty gritty of it, it's one-off events or it's large macro events, and it's the dominoes picture. It's the overall picture. It's the thesis. It's the model that you're working with in your mind, and it's where you allocate your bets, so to speak, based on your model. Okay. And what this game thesis is based on is here. I'm going to mark these out so that I know I cover a topic. Oh crap! Don't want to do it that big. So one of these models are usually based on the understandings of incentives. Show me the incentives, and I'll show you what happens. Okay, and an example would be when the oil. Like here's an actual real world example of a thesis of a model, someone's model, right? So back in the day, the oil futures went negative. Oil futures because they were trying to get rid of oil, but no one wanted to take delivery of it. So because of that, people thought, well, if oil can't find a place to go, what does that mean? Things that store oil are going to go up, like the storage costs of oil are going to go up. So shipping containers went up massively. The stocks went up 5x. They went 500% within like a month. And so people that understood this cause and effect narrative, this story, so to speak, they made a lot of money. You could have bought some options on oil tankers, stocks, and you could make 100x or 1,000x your money. Okay, that's a narrative. That's a story. That's a thesis. Okay, and like this is one method for making money. And it's often a story or a narrative, and it's based on like trying to come up with an accurate model of reality, understanding incentives, understanding humans, and understanding how these events relate to each other. All right. So so it's also based on if-then statements, like logic about humans. Okay, what is this? Let me see. Okay, so, well, that's in the future. I'm going to get to that later. Okay, so game thesis, right? And a derivative of game thesis that deserves its own section is macro psychology, like the psychological movements. And that's also a part of game thesis. It's your narrative regarding how human psychology is working, because let's say humans are moving forward in time, and if humans made a lot of money, for instance, they're going to be more likely to sell. It's going to be more likely to enter a bear market when you're sitting on top of lots of gains. That's a thesis. That's a story. Human beings saying, oh, like these guys over here have just made a lot of money. There's going to be some of them that are going to exit. That's going to cause the market to go down. That's a thesis. That's a story. So it is a derivative. It's human psychology as consideration. It's understanding the incentives, right? So my macro psychology, but it's big enough because this is a big cycle-driven thing. Whereas game thesis is one-off events, you can consider a cycle a one-off cycle, right? Before you consider a new cycle. You're going to consider a bear market cycle and a bull market cycle. That is a one-off event, and you're playing that event. So there's two parts of this macro psychology, the sell market and the buy market. And this is when there's been recently massive losses. You should be buying when there's massive pain and massive losses. And the distance between these is when the other one becomes a distant memory. So it's, about 2 years, 3 years. It's the amount of time it takes for people to forget, like all those gains or all those losses. We've only been living in losses for a while. That feeling of distant memory from the gains is when it's like peak losses, and you usually get people dumping right in the worst moment. That's when you should be buying. Rapid change in total wealth, when someone just made a ton of money, is, that's when you should be selling. When a lot of people have made a lot of money. Now, you don't want to sell too early because in many cases, as I'll show you later, you could be selling yourself short quite a bit if like people are going to make a lot of money in crypto, so you don't want to sell early. So that's one of the things we will consider. Okay, so in the sell market, a professional will say, I need to lock in some of my change in status earnings, right? Like I've just earned a ridiculous amount of money. I need to make that real. I need to realize that. That's what the professional will say. A novice will say, if I don't buy now, I'm going to miss out this opportunity. I'm fear of missing out. In other words, they're coming into a new field because of price movement. They see this crazy price movement and they're like, oh my gosh, I got to buy it now. I'm getting so excited. Something gets on their radar because of the price movement. If you're finding out about something because it's rocketing in price, you're most likely in this category. If you're just looking at something because it's rocketing in price, what you need to look for is things that are like this or things that are like this. Okay, that's what you need if you're a professional. And I'll buy something like this if I think it's early enough. But buy high, sell higher, right? I've heard that saying, and that's a very true strategy, and I've done that plenty of times successfully. So, these are all things to consider. Okay. And then, so the internet was, like these new technologies go through several cycles of wealth creation and destruction in, these cycles. And the web probably went through like 2 or 3, right? Well, crypto is going to be like 6 or 10. It's going to be one of the biggest in history. So it's going to go through a couple of waves, and it's going to keep going and going and going because this is the biggest wealth transfer in history. So a bunch of people made rich, pull back. A bunch of people made rich, pull back. A bunch of people made rich, pull back. And that's what this is. Okay, this thing right here. And it's going to make fortunes. For the guy who just held and only takes out a little bit, he's going to make a fortune. For the guy who tries to play this and he comes back here and he sells here and he comes back here, that guy's losing. Okay. Because this is a massive transformation and we're not even at this part of the phase yet. So you just want to hodl. Even if the market pulls back, like I said, I think there is going to be a pullback, but then I think it's going to be the craziest run we've ever seen. And we might not see this because institutions are coming in. Okay. This is all my, thinking. This is me thinking, establishing my thoughts. And I'm going to come back to these videos and review them later on to see if I was right. Okay, and technical charts are part of psychology. Like I see people looking at technical charts all the time, but this is extreme short term. This is not good for the long term, in my opinion. Oh, whoops. Okay, so for the buy market, a professional is saying everyone is thinking this market is dead. It's time to buy. So yeah, if everyone thinks the market is dead, you should be buying. And novice is saying, I'm going to lose everything, right? A novice is like sells out. Okay. But anyways, regarding technical charts, which everybody likes to do, I don't even bother with it because this is only very, very short. And you could play this. This is something you can make money from, but it's extremely short term. It requires your constant attention and you need to be very skilled. And you do need to take some math into consideration and be advanced with it to win. Technical charts are not my favorite strategy, but there are people who are good at that. Okay, and then so this is what I just went over was the game thesis and the micro strategy of that are part of the information that helps us deal with future probabilities, right? So then the other side of this equation, that's not based on stories or game thesis or macro psychology, is mathematics, okay? And this is basically resource flow tracking, humans, numbers, etc. And regarding this metric for future correlations is in math, you're going to find correlations. And if you're using, now here's an important thing for you to understand. If you are using some data points such as charts, you are assuming correlations of probability have been established. So for people that like to study charts, there's all these different names for different technical analysis strategies. If you're whatever it's called, my brain is freezing. The technical chart analysis type person, you are assuming that someone has established correlations that lead to higher probabilities of an outcome. And that's what you're using. And you need to understand what those are. You need to understand those numbers if you want to be the best. I don't play this game because I think there's easier strategies. To win at charting is very hard, but you can be skilled at it. I prefer methods that require less attention. I like thinking, everybody's got to play their strategy. I like thinking in the effects of humanity. I like playing in narratives. Okay, so data group relevance. Okay, so correlations help you determine what your data is saying or your data group relevance, and whether or not, if it's not correlated, then it's worthless, right? If it is correlated, some of the things, for example, that are correlated are rates of change, as well as current adoption, right? And when rates of change and current adoption come together, you get expected adoption, right? Rates of change and current adoption, expected adoption, right? And then what these two things rates of change, current adoption coming together to make expected adoption helps you determine status in the market, as well as, rates of change on itself helping you determine status of the market. So those are math-based approaches. You need you can come up with what you think is going to be the total market acquisition, But this is the math-based version. The narrative one is also a method for getting where's the total market. So one is like you're saying, oh, this idea, this story, this is the total market, right? Based on a story. The math one is just using, rates of change, like where are we going to end up, right? So you could take both of them together, right? Mine is mostly on narratives, but because the math one is usually like this, right? Like the math one is less correlated with crypto because it goes through. I'm actually going to in a future video I'll show it, but you're seeing rates of change like this, like something happening, attention, humans, whatever. So it's an inconsistent mathematical relationship. So I like the stories, like these people got rich here, and now we're entering a bear market. These people got rich here. It's back to that story thesis, right? Okay, so what market will be affected by mature products, right? That's what you're thinking with crypto. And basically, crypto is all value-related transactions. So basically, how much capital will be affected by crypto's market acquisition? How much capital? This is down to my narrative, right? Every transaction is a value transaction. Thus, crypto will affect everything, right? This is why this is the greatest wealth transfer in human history. Because everybody's transacting money. Whenever you transact in anything, you're usually transacting in money. So crypto is going to revolutionize money. It's going to revolutionize everything. And that's why crypto is going to be, one of the biggest transformational events in human history. Okay. Now, to go over these three things again, macro psychology, game thesis, and mathematics, we're actually going to go over the actual status of these things so we can actually determine the status of the crypto markets. So as far as analysis is concerned, this is where we're going to stop for today on these ratios. But I am going to go in the future videos. I'm going to go over adoption. I'm going to go over rates of change and time rates for the mathematics component. Then I'm going to go over game thesis and my personal thesis as far as awareness, webs of matrix relationships. So the events, and the matrix, like back to this, right? This web of relationships. We'll take a look at that, with whatever numbers I can figure out or methods for looking at that. We're going to look at government action, time rates, specific models. These are my specific storylines, what I think, where I think we're going to be, etc. So I'm going to get deep into this. I'm going to try to do the best that I can at answering this question, the status of where we are with crypto. And then finally, the macro psychology, the emotions, Glassnode, the new pull charts. We're going to go over that. I'll go through a deep explanation for all these things, events. I'll go over the events and technical charting. So we'll cover all these things in the future videos. However, I'm going to go over this right now, the ratios, some of the basic math stuff. But I will say professional trader strategies use mathematics. It's a short-term edge, right? Mathematics is a short-term edge. And I do use a little bit of math. It's about 20 to 30% of my strategy, right? I'd say my favorite strategy is about 70%, and this is about 10%, like charting and stuff. But most of my strategy is here. Or, so maybe this should be really 80%, and this should probably be like, I don't know, 15, and this is 5, right? Something like that, whatever, broadly speaking. But I do most of my strategy through thesis, game thesis. That's my personal strategy. That's my long-term edge, right? And this does have a long-term edge. Like, because the reason I like this strategy, not only do I like imagining how this is going to affect humanity, but most people aren't patient. And because most people aren't patient, that's where I could win, because most people aren't willing to hold on to things for a long time. And so I can win through that strategy. However, the medium strategy is the macro psychology. This is a particular wave of a cycle, right? And before we go higher, right? So, and these are usually like 3-year periods, right? Or, like the 6 month, about a year period of bull, and then, bear for 2 years or 3 years or whatever. So this is a medium strategy. This is the decade-long strategy of me just hodling the best things I can find. And I keep up with my thesis. I do constant research, and I keep myself positioned for that thesis. And then the short term is the mathematics. So, and we are going to go over the mathematics so we can know in the short term where we are. I'll go over the game thesis once again for the long term, and we'll go over that. Okay, so just to hit on the ratios, these are some of the simpler ones. Where we are for the altcoin season index, I have a low ranking as far as the impact of this, because I think the altcoins will take over for a while. But who knows? Bitcoin, like I'll show you why Bitcoin's bullish, against the alts and all of those things as well. But this is just kind of looking at the past, and it doesn't really tell you the future. And like if you're here, you can kind of say we're going to enter alt. If we're here, you could say, oh, it's going to be Bitcoin. But I think that this pattern could break if altcoins really started delivering. If they start delivering cheap. Right? If you get cheap blockchains that do powerful technologies, then they might break this pattern, but who knows, right? But that's why I consider it weak. This is just my opinion. Okay, and then as far as another math-based short-term analysis, this is medium range short-term basis, a Newpol chart. It's net unrealized profit or loss. Okay, and my weight for this is actually high. I actually do consult this. And what it is you got this UTXO, right? It's destroyed when someone transfers money, and it's created when someone receives it, right? So it's the old account and the new account, and when at a certain price level, right? And when this person sells, they sell at a loss or a gain, and then change of price since this UTXO was created, the change in price is the realized profit or the realized loss, whatever the change of price was since they bought it, right? And there's a new one created, and it starts at zero loss or gain because it's a new account with a new value, right? And that's a new UTXO. And that's how, that's a basis, this number, this idea is the basis for how this is calculated, okay? And at that point, when something is transferred in, from that forward on, change of time and change of price, if the price goes up, it's an unrealized profit. If price goes down, it's an unrealized loss, right? So if price goes down, it's a loss. Price goes up, it's a gain, okay, or a profit. And then so how many accounts, what percentage of accounts, you can use all of this data. This simple idea of, change in price since someone receives something and change in time, right, to get these numbers, okay? So looking at this chart, you can see that it's market cap, subtract realized cap, right? When it was bought, right, minus, so that gives you the change, right, this change in cap in this price. And this is just for Bitcoin, but, it helps you look at all of them. And you can see about the distance that we see that these things are in the greed phase, right? And it looks like it's getting shorter. And so, who knows? It might be soon. We might be seeing the drop soon, or we can go one more step higher, right? However, this is the point in the cycle when it crossed that point of never being lower than this. So it shows you how late in the cycle that it never goes that low again. You can see that from right here, right? So it never went this low again, right? From this low, which was late in the cycle, right? It was late in the cycle that it never went this low again. The same thing for the last cycle. Because these are exponential moving technologies, this is the last time that the price ever was this low, right? You can see the low right here and the low right here, and you pull it back, and it was late in the cycle. Okay, late in the cycle, about 2/3 of the way through the greed phase, that it was at prices that it would never be that low again. Okay, so if we're within the 2/3, we might be there, or we might not. For Bitcoin, who knows, right? But this thing could go way longer because institutions are coming in because of this. This might break how long that period is because of these chain of events, that this zeitgeist moment that I really believe was a zeitgeist. So it could be long, it could be short, who knows? But you can see that we have been here a while. And if you look at the actual distance, it's like right here. Yeah, so you can see about the size is about this size, right? So it looks like it would be before. With this one, it's about the same. Or, it actually entered here. Actually entered way back here. So this one's actually a lot longer. It looks about the same, or maybe a little bit longer than this one even. So yeah, it has room to go through another exponential cycle. And if it does, it'll never be as low as we are right now. And I actually think that is part of what I think. I think we're never going to see the levels we're at right now again. But I could be wrong. It could have a major pullback. And if it does, good. I'll just hold it because I believe that these events from the market are going to take effect. All right, guys. So that's the end of part one. The stuff I'm going to cover in the future is more of the mathematics, the analysis, and then the micropsychology, the game theory, the macro, and the more of the math. And I'll try to, so we can have a good understanding of the status of the crypto markets. All right. If you like this content, please like and subscribe.